Good morning and welcome to the Market Forecast. I'm John Hoagland. Thanks for trusting me with your time. It is Wednesday, March the 17th. Happy St. Patrick's Day. Hopefully you have a lucky trading day and do a lot of making of the green today. Probably some pretty decent opportunities, but we may have to wait for those until later on in the session. If you find yourself out celebrating this evening or today, please make sure you just take care of yourself, and we don't want to see anybody getting hurt. As always, we're going to look at these markets in context through the lens of risk management. Always starting with the economic numbers due out today, 7:30 this morning. The housing starts and permits came out, both of them a little lower than expected, so perhaps a little bit of sign of perhaps some slowing in the housing market, perhaps from a little bit of upticks in interest rates. It's going to be interesting. 9:30, of course, this morning we have the EIA Petroleum Status Report, 1 o'clock p.m. Central Time, the FOMC announcement, and then 1:30, the press conference with the Fed chairman. I've asked them if they would move the FOMC release because it stomps right at the beginning of my group coaching session, which, by the way, I'll put the link in there. We'll start at about 1:05 today because of the FOMC release, and give some folks to respond to that if you're going to be. And as far as other news is concerned, we've got our U.S. stocks are kind of guarded this morning. The Dow, the only one showing positive numbers so far this morning. Lots of waiting and seeing what they're going to say with the FOMC announcement. The Federal Reserve believes that inflation is not a risk, and Chairman Powell is going to have to do some tight walking to convince everybody of that. Probably it's going to be an interesting trading day. I don't think that they're expected to do anything to rates this time. I don't think that they're, again, not concerned about inflation here just yet. But the Central Bank of Brazil is meeting today, and they're probably going to be raising their rates by about 50%, 50 basis points, or 0.5%. So you're going to see what's going on there. Oh, good morning, Lacey. Lacey says good morning, everyone. Crude prices are holding above a key support after the API announced a 1 million barrel draw in inventory last night. The EIA is looking for about a 3 million barrel boost. So another interesting day in crude oil as always. Make sure you like, share, comment, question, feedback, and heckle at will. Make sure you subscribe to our YouTube channel so you can get notifications when we do go. The VIX up just a little bit, about 3.5% up back over that 20 level at 2048 last I checked. Dollar index up slightly, 91.93, just hanging underneath that 92. And the 10-year yield, 1.67%. It's at a 13-month high. Always want to say good morning to everybody. I saw my guy, the infamous Felix Escobar, first one in the room. You're back on top. You win the prize. Bill, good morning. Caesar, Brian, Murph, happy St. Patrick's Day. Yes, today is everyone's lucky day. Have a green beer, grab a 4-leaf clover, and make some green. All right. Kevin, good morning. Will, Troy, D. McGregor, good morning. Charles, Mike, the chef is here. James, Michael, Laura, John Doherty, the dancing bear is here. Might be a good, interesting day for the Dancing Bear. Crude oil just opening up, leaving the opening range at the high of the session, and currently testing that weekly kickoff low, 63.80, by the way. Danny Ireland, Jason, Rob T, Shady Trader. Yes, we are going to be talking about opening range setups for the group coaching. I've got that written down here, so I will make sure and be prepared for you for that. Nico, good morning. Tim G, Lamus, good morning. No name, just a dash. Andre, Joseph, good morning. Murph, so you were enjoying the move to release. So they're going to, yes, right. That would be nice of them, right? Yeah, they're probably not going to worry about that, I don't think. Bulldozer, good morning. Doyle and Trading Research, great day in the morning to you. Yes, sounds like a sales meeting. It might be. I think the Powell's going to have to do some selling. And good morning, ASUN as well. Okay, let's go ahead and jump into the charts here. As always, we like to start with the daily in crude oil. Let me pull that up. We do have the charts nice and solid this morning, so we shouldn't have any issues. Let's have a look. All right, so my dog Lacey's upset with me because I'm not talking to her and I'm talking to you guys. So sorry about that noise if it's a distraction. So we're in rollover in crude. I've stayed in April because the volume was about even this morning when I opened up my dome, but the liquidity looked a little better in April. That's going to change throughout the day. So tomorrow we'll be looking at the May contract. There's only a nickel difference between the two, so you're not going to really have to adjust any of your levels when we do that. Currently, again, now testing that weekly kickoff low of 63.80. We're holding upside structure, and even if we do see some activity down below that level, I think we've got a little bit more room downside before we truly break this upside structure that we're currently in. I'm calling this the current situation, as long as we hold above that weekly kickoff low, upside digestion. The market really just kind of holding there, looking for new information. So weekly kickoff low, again, support. We got data due out 9:30. Again, the EIA is looking for a 3 million barrel boost, I think it was. Yes, boost in crude oil. So we'll see how the markets respond to that. Everything today is really going to be about the FOMC and all of these markets. Pipels, haven't seen you for a while. Good to see you. Taking a look now into the 30-minute chart. Okay, we opened basically in value area, so I'm kind of a hurry up and wait type of situation. It appears as though we've left the opening range at the high of the session, and we've had a pretty deep look down below this weekly kickoff low here. A couple of really good opportunities off that low yesterday. If we can't accept down below it, I'll look for this market to return back perhaps to settlement. We've got some overnight shorts in holding short positions here. If they don't continue to see continuation to the downside, and that's going to mean holding below the 63.80 level at some point, they may get a little bit nervous and get out of some of those shorts and move the market back to a higher level. So decent opportunity here in the first thing in the morning here. Opening range to the downside. If it doesn't hold, this may become and remain supportive and give us another opportunity for another trade today. But again, EIA 9:30, anything can and usually does happen with that release. Okay, here's the E-mini S&Ps. I don't remember if I mentioned yesterday, but we're kind of seeing signs in the S&Ps at least that the upside momentum is starting to fall off a little bit, and we're seeing that, I think, this morning. A lot of people a little bit guarded with the FOMC meeting and with rates and things, the uncertainties that are still present in the marketplace, and can't go up all the time. The upside momentum, I believe, is stalling. I think I tried to mention that yesterday. I don't remember if I did, but expiration on Friday, open interest is still somewhat run by rollover. We added 62,000 in open interest yesterday in a kind of a no non-directional kind of a day. I mean, you look at the day session bar here; it's a doji. There was no real direction. So again, I'm kind of placing that open interest boost on rollover. We're going to be looking at this market probably before the FOMC meeting, doing a lot of balancing, a lot of hedging going on with the longer, stronger participants. Settlement is up here, 39.52.50. Put that on your charts. We've got maybe some overnight longs, just kind of holding the price inside the value area from Monday's activity. A little bit of possible repair here. So I'm going to be kind of looking at gap rules. If we open with a gap and we can't close that gap relatively early, I'm going to be looking for opportunities to see this market continue lower. But again, it is FOMC. There's going to be a lot of balancing going on, and I'm not looking for any really big opportunities unless there's some sort of headline risk. We always have to be aware of headline risk. So settlements up here, we've got overnight shorts here. If we don't have directional longer time frame activity, we're probably going to set up a range and stay in that range until 1 o'clock or 1:30 when something may or may not change. We don't know that. So I'm going to be kind of focusing on naked points of controls for visuals if we do start to get a little bit volatile. Point of control from yesterday up here, naked point of control 39.64. This point of control down here 39.29, and there's points lower here. It's going to be a while before we can get anything down below this level right here as far as naked points of control. So again, without headline news, I'm looking for these markets to really kind of find a balance and wait for the information. It's kind of the hurry up and wait FOMC meeting type of activity. The Nasdaq, same but different, of course. We had a look above our weekly kickoff high yesterday, but it was rejected. This is representing as excess, price getting too high, buyers bailing out and sellers coming in and pushing this market back lower. And we're seeing our overnight high here, within 4 points of this weekly kickoff important inflection level. This excess up here is a bit of concern. We just put in all-time highs in the S&P and in the Dow yesterday. We're so far away from it in the Nasdaq here. That's why it's kind of same but different. Again, I'm looking for hedging. I'm looking for balance to be seeked out today, and then reaction off the FOMC meeting. Our overnight high, basically, weekly kickoff high. We had some exuberance up here, but quickly rejected, closing down below it, settlement 13,141.25. And we're opening with a gap. We have some overnight inventory to the short side. Without the help of U.S.-based traders pushing this market lower, some of these short time frame, weaker hands traders are going to get nervous and bring price back to possibly a gap close or even higher, perhaps back to settlement. But again, headline risks can do anything. Anything can happen. All right, here is the gold. This market I'm calling this a funk. It's kind of off my radar a little bit here. The mix of volume and open interest, increases and losses, there's just no real direction that I can glean from the information that I'm looking at here. We have an inside trading day, a very narrow range yesterday, an even narrower range today. The market really is just kind of a hurry up and wait type of situation. I'm probably going to be just monitoring for change. But, as far as being high on the radar today, no. Look at the 30. Monday, Tuesday, Wednesday, narrow ranges, no real change to value. We have no overnight inventory. We've tested the overnight low. We're just kind of hanging around here. I'm just going to be monitoring to see if there's some sort of change in the current situation here. It's kind of it's on the back burner, not necessarily primary into the in the opportunities that I'm going to be looking for today. Let's take a look at the euro. Okay, almost a similar situation, It's centrally located in the current area of balance, which I'm going to call, let's call it 120.10, basically down to our weekly kickoff low here of 118.50. We're centrally located. We're still seemingly acting in short time frame control, short time frame levels likely to be respected. Overnight open interest is still somewhat blurry. We added 1,700 in open interest yesterday without any real direction. 30-minute chart. What do we got here? We got nothing. Not on the radar here, at least not yet. Why? Settlement is right here, 119.27. Inside value from yesterday, stay patient. No overnight inventory. Again, stay patient. Kind of off the radar. Again, monitoring for potential opportunities. But, today is going to be one of those days. It seems like the markets are really just kind of settling in and waiting for Chairman Powell to speak. It just seems as though that is what they seem to be doing. Now, the 10-year's got a little bit of a change here going on. With the rate at 13-month highs, we see the opportunity for us to perhaps get a chance to trade this level that kind of appeared over the last couple of sessions or weeks. The weekly low from last week, the weekly low from this week. We're seeing some potential as this support perhaps becoming resistance. Now, I know some of us don't really like that idea, but you do see it happen. We get a pull back towards this level. It could offer an opportunity. Take a look at the 30. Okay, here's that level. It was last week's low. That was this week's low. We've come through it. Now we're coming at it from the other direction. Is this going to turn from support into resistance? It gives us that opportunity perhaps to look for a cheap trade up against that level. And those are the trades that I like the best. The ones that don't cost much. See what else we have. Oh, gap rules. Okay. So we're probably seeing a little bit of inventory adjustment. Settlements all the way up here at 130.05. We got a lot of shorts in this market. If these shorts can hold on and keep us down below this inflection level, we may see continuation. But it may take longer, stronger sellers to do that. Are they going to be that involved today? Everybody's waiting. Everybody's waiting for FOMC. It's so difficult to kind of anticipate how markets are going to react from fundamental information. There's the kind of the buy the rumor, sell the news effect, where and when everybody is expecting a number to come out good or positive for a particular product and for price to move higher, they're usually always already positioned in that direction when that information does get released. We stand around looking around in the pit going, what's going on? It should be rallying. It should be rallying. Pretty soon you figure out everybody that is available to be long is already long. There's nobody left to buy it. So you get the opposite situation going. Buy the rumor, sell the news. So be patient today. There's always opportunities. If you miss a couple, it's okay. There may be bigger opportunities for you later on. If you are somebody who does trade in and around these numbers, and I know you're not allowed to trade in a step 2 or in a funded account, but as the things kind of settle down, maybe there'll be some opportunities as the market kind of digests that information. I find myself sometimes thinking that I should be able to. I feel like I want to be able to tell everybody what's going to happen, and be sure of it, and know that that's that I know that that's going to happen. But nobody can do that, and I appreciate everybody coming every day and hanging out with me for a little while. And if I could tell you exactly what was going on and what was going to happen in these markets, I would certainly tell you. But nobody can do that. So we look at these markets through the context we look at them in the market forecast. You have your context that you look at your market, hopefully consistently. One of the things that people ask me the most: how do I become consistent in my trading? How do I become consistent and profitable in my trading? To which I answer with another question. What are you bringing consistently to the marketplace? You should be doing your homework. You should have a consistent way that you look at the markets, whether it's market profile or a 30-minute chart or a series of, top-down approach, which, we always recommend that. Just use it consistently. Notice the differences. Notice when things are changing, and be easy on yourself. It's very easy to get your gears stripped when there's a sudden change in the market state, when volatility all of a sudden pops up. It becomes very, very seductive just to try and get into something, right? But it's been my experience that you're better being patient, waiting for the market to come say, here it is. Go looking for trades, you're going to find them, and they may not be the ones that you're looking for. So I had a little extra time here this morning and we kind of ran through the charts, but that's because I'm not seeing anything that's really speaking to me in these charts. The S&Ps, that momentum that may be changing a little bit from the upside, that's something that I'm going to be paying attention to, watching the opening range. We're going to be opening with a gap. There may be early opportunities, but because of the FOMC meeting, because of other things, the market is I feel like it's hiding something from me, if that makes sense. I know that there's something in there, and I know that there's something that's going to happen, but it seems to be hiding, at least for me. Hopefully, you're going to be able to decipher what the market's information is. It may not come to me until later on. My goal is not losing money. Small risk for bigger opportunities. And if I find them, I find them. If not, tomorrow's another day. Okay? Have a great trading day. Have a beer for me on St. Patrick's Day. Had a nice time with my lovely wife last night for our 25th wedding anniversary. Just went out and had a nice dinner and relaxed for a little while. And we'll do something bigger later on. But it's going to be an interesting day. Aren't they all, though? Take your deep breath. I hope you guys do this with me. Always makes me feel good. Humble, grateful, and creative today. Pick your spots. Be patient. Opportunity is coming. Have a great trading day, and we'll see you about 1:05 for the group coaching. We should get it started a little bit so we can all see what happens with the FOMC meeting, and we'll try and keep an eye on that during the group coaching session as well. And we will see you then. Until then, get out there, make some profits. Today's all about the making of the green, but don't lose anything. Easy, right? It's easy. It shouldn't be that hard. Oh boy.